Okay. Hello, good evening, everyone. So, can you guys hear me? Let me share my screen.
Yes. Yes. Very
Okay. So today we'll be talking about some other candlestick patterns. Right? We're talking about some other candlestick pattern. We have discussed about the formation of candlestick. We have talked about candlestick, the like that means like how they form. We also talked about some candlestick pattern where I give example of the bullish candle. I give example of doji candle. I give example of engulfing candle. I give example of dragonfly doji pattern. I give example of gravestone doji pattern as well. And then yesterday we discussed about the morning star and evening star candlestick pattern. So today we'll be talking about another candlestick pattern, which is called the tweezer top and the tweezer bottom. So tweezer top and tweezer bottom. These are also other candlestick pattern that we'll be talking about today. Do stick- so these are other candlestick pattern we're talking about today. So the first one is the tweezer top, while the second one is the tweezer bottom. So let me just do this. So the tweezer top and the tweezer bottom. This is for the tweezer top, and then this for the tweezer bottom. So these are also example of candlestick pattern, but we have a lot of them. But this is one of another example again of candlestick pattern. So the first one we have here is the tweezer top, while the second one here is the tweezer bottom. So now, what is tweezer top? Now, tweezer top is, as I said there, tweezer top formation is considered as a bearish reversal pattern seen at the top of an uptrend, and it consists of two candlesticks. So it's considered as a bearish for tweezer top. Tweezer top is considered as a bearish reversal pattern seen at the top of an uptrend, and it consists of two candlesticks. Now it's seen at the top of an uptrend and it signifies that a reversal might happen. So whenever you see this pattern occur at the top of an uptrend, maybe we're going up in price and then this tweezer top pattern happens at the top, it indicates that a bearish reversal is about to happen. So if we're going up, which we're going bullish, and then this tweezer top happen, it signifies that a bullish reversal is about a bearish reversal is about to happen. That means the price is about to change from going up, it's about to change to start going down. So that is for the tweezer top. While for the tweezer bottom formation is considered as a it's considered as a bullish reversal pattern, as a bullish reversal pattern seen at the bottom of a downtrend. Seen at the bottom of a downtrend. So this is for the tweezer bottom. So let's see an example of how they look like for the tweezer top and the tweezer bottom. Okay. So this will be for the tweezer top, and then this will be for the tweezer bottom. This will be for the tweezer bottom. So this is an example of a tweezer bottom. So for a tweezer top formation is considered as a bearish reversal pattern seen at the top of an uptrend, and it consists of two candlesticks, which the first one the first one will be the bullish candle, and then the second one will be the bearish candle. And you can see their heights are almost the same or about the same level. Then for the tweezer bottom formation is considered as a bullish reversal pattern. So this should be here. For a tweezer bottom formation is considered as a bullish reversal pattern seen at the bottom of a downtrend. It consists of two candlesticks, with the first one being the bearish candle and the second one being the bullish candle. So let's start from here. This will be the bearish candle, will be the bullish candle for a tweezer bullish candle. This will be our bearish candle. And for the tweezer bottom, this will be our bearish candle. This be bullish candle. Bullish. So now let's talk about this tweezer top. Now for the tweezer top, when it occurred during an uptrend, as I said, it's a formation considered as a bearish reversal pattern seen at the top of an uptrend. So when the tweezer top occurred during an uptrend, buyers pushed the price because they were actually going up in price, right? We're going up in price, and then this tweezer top occur at the top of an uptrend, and then it gave us this impression that the market is still going up because of this first bullish candle. Because if we're going up in price like this, right? If we're going up in price like this, and then this pattern occur, the first this first bullish candle is still representing that there's still buyers in the market because we're still able to push the price up. But surprisingly, sellers step into the market and then push the price lower, meaning creating this bearish candle, meaning that the price is about to reverse to the downside. And then we close below this. This was the close price because if we're going up in price, right? We're going up in price. As I told you, the formation of every candlestick for a bullish candlestick, we open at this point. This was our open price. We close at this point, right? This is our close price. This is the lowest point the price went to, and this is the highest point the price went to. So this is our close for a bullish candle. And then sellers stepped into the market. While buyers were still in control of the market, sellers stepped into the market and push the price all the way to this bottom here. That means we close at this point. So this is our open price for a bearish candle. This is the highest point the price went to. At some point, sellers were able to push the price all the way to this down here, but they could not continue pushing it down. And then we close at this point, which is the lowest, which is the closure of this bearish candle. So you can see at first when we're going up in price, right? As this bullish candlestick pattern candlestick happen, it's also signified that there's still buyers in the market. That means we can continue pushing the price up. And then surprisingly, sellers step into the market, push the price, and even close below at this point, meaning that the reversal is about to change. And then this pattern signifies that whenever you see this pattern for a tweezer top, whenever you see it occur at the top of an uptrend, it means that a bullish, bearish reversal is about to happen in the market. So now this, from going up like this, it will change and start pulling back down. This is for a tweezer top. We're going to see an example of it in the chart. Then, okay, let's talk about the bearish as well. That's the tweezer bottom. So the tweezer bottom, it consists of it's considered as a bullish reversal pattern seen at the bottom of a downtrend, and it consists of two candlesticks. Now, if we are going down in price, right? So if we're going down with price because it's seen at the bottom of a downtrend and signifies a bullish reversal is about to happen. So if we're going down with price like this, right? We're going down with price and then this pattern occur at the bottom of a downtrend. At first, it's still showing that sellers are still in charge of the market because they are able to still continue pushing the price to lower, right? Then surprisingly, buyers step into the market and push the price above closing at this point. So you can see there's a reversal that's already happening based on this bullish candle that occurred here. So you can see now the price will change from going down and to start pulling up because of this tweezer bottom formation that happened at the bottom of a downtrend. And it always consists of two candlesticks. They are mostly the same, about the same height itself, but some you can maybe see that the height might be a bit the same, or it can look like this, right? But most of the times you see them equal like this, but why other times you can see them like this, maybe a little bit not really too equal like that, but they look equal, right? You can see it like this as well. So it just depends on how you're able to see it at a probably support or resistance level, right? So let's just do a recap and then I'll show it on the chart. So a tweezer top, which is a candlestick pattern, is considered as a bearish reversal pattern seen at the top of an uptrend, and it consists of two candlesticks. The first candle being the bullish candle and the second candle being the bearish candle. So at some point the price was going up, right? And then these buyers were still in charge of the market, right? They were still in charge of the market, and the seller stepped into the market and pushed the price all the way down here, meaning that we close at this point. So they are able to push the price lower, right? Changing from a bullish reversal and now it has turned to bearish. So it has started coming down from going up. Now the price is pulling down. So for the tweezer top, for the tweezer bottom, it's considered as a bullish reversal pattern seen at the bottom of a downtrend. That means when we're going down in price, right? And then at the bottom of that downtrend, we get to see that this tweezer bottom happened, signify that a bullish reversal is about to happen in the market. So at some point, we were pushing the price. That means that sellers were still in charge of the market, and then um, a bullish candle occurred, looking like a tweezer top, which signifies that a bullish reversal is about to happen in the market, and then price started pulling back up. So this is an example of a bullish reversal pattern. Why this is an example of a bearish reversal pattern? Why you can't just trade this candlestick when you see them on charts, right? You can't just trade them because when they appear, you don't just trade them. You use other tools like other analysis technical like confirm other confirmations again to tell you when to buy or when to sell. So let's see an example. Let's see an example of the tweezer top and the tweezer bottom. So let's see a graphic representation of the tweezer top and the tweezer bottom. So let's see an example of the tweezer top, and then we'll also see an example of the tweezer bottom. So this is an example of a tweezer top, right? This is an example of a tweezer top and it's occur at the top of an uptrend. Now the first candle, right? The first candle being for a tweezer top, the first candle being the bullish candle, right? So this is the bullish candle. So it just depends on how you decide to set the color of your chart. So this is how I decide to set my own. So this is the bullish candle, which is the first candle, and the second candle being the bearish candle. Second candle being the bearish candle. So the second candle being the bearish candle. And I told you, it's a for a tweezer top, it's a bearish reversal pattern which often occur at the top of an uptrend. Now, if you look at this chart, we're actually moving up in price, right? We're actually moving up in price. We're moving up in price, right? We're moving up in price, and then it happened. So you can see it happened actually at the top. It's not like it happened here. Maybe price came here and then it now happened at this point, and then we started seeing some other things. Like this was not how it was. It actually happened at the top of an uptrend because we're going up like this, right? Right, we're pulling up like this, and then this tweezer top happened at the top, signifying that a bearish reversal is about to happen. And the moment the tweezer top happened in the market, if you notice, the price started pulling down, right? Price started pulling down after the pattern happened. So you can see it's a very strong reversal pattern. So tweezer top pattern is considered as a bearish reversal pattern which occurred at the top of an uptrend. So we're going up in price, and then the tweezer top occurred at the top of an uptrend, signifying that a bearish reversal is about to happen. And the moment that occurred, you can see the price started pulling down. So if we were trading just candlestick, you could just enter for a sell at this point, right? Put your stop loss a bit below here, and then you have already make some quick bucks here, right? You already make some quick bucks here. So this is just an example of a tweezer top and how it occur in the market. So now let's look for the tweezer bottom. Tweezer bottom. Use this also. Okay. So this is an example of a tweezer bottom, right? This is an example of a tweezer bottom. So at some point, because a tweezer bottom is considered as a bullish reversal pattern which occur at the bottom of a downtrend, and signifies that when this pattern occur at the bottom of a downtrend, a bullish reversal is about to happen, and it consists of two candlesticks. The first candle being the bearish candle, the second candle being the bullish candle. And I told you that you see them mostly the same size or about the same size, which like the difference will not be that much. So you can see this one is just about the same size, except for the week of this one that went out. So, but the size are the same. So at some point where price was coming down, right? We were coming down in price, and then this pattern, the tweezer top occurred at the bottom of the downtrend, signified that a bullish reversal is about to happen. And the moment it occurred, you can see price started pulling up, right? Price started pulling up after it's occurred, price started pulling up. So this also an example of a tweezer bottom, because we were coming down in price, right? It occurs at the bottom of a downtrend. So we were coming down in price, and then it occurs at the bottom of a downtrend, which when it occurred, it signified that a bullish reversal is about to happen. So we were actually coming down in price like this, right? We were coming down in price, and then the tweezer bottom occurred, signified that a bullish reversal is about to happen, and you can see we started pulling up the moment it's happened. So the first candle, which is this, will be the bearish candle, as we said, for the tweezer bottom. The first candle being the bearish candle, while the second candle, which is this, will be the bullish candle. Will be the bullish candle. So at some point, sellers were in charge of the market for this tweezer bottom. At some point, sellers were in charge of the market, pushing the price all the way down. They were pushing it down. And then at this point, the tweezer bottom happened, signify that buyers have stepped into the market and they're able to push the price all the way up. At the moment the pattern happened, price started pulling up, right? So you can see it's a very strong reversal pattern as well, both for the bearish and the bullish. So if you were trading just candlestick patterns, you could just, if you have maybe other confirmation, you can just enter the moment the tweezer bottom happen, you can just enter for a buy here, put your stop loss a little bit above here, and then you can target here or you target here. So you can see I've just made some quick bucks in the market. So this is just an example of how the tweezer top and the tweezer bottom occur in the market. So let's just do a quick recap, and then let's see. So we still have some few minutes. Mm, So today, what we discussed about, mm, so this today we discussed about two candlestick pattern, one being the tweezer top and the second one being the tweezer bottom. Now the tweezer top is the tweezer top formation is considered as a bearish reversal pattern, which is seen or mostly occur at the top of an uptrend. That means we're going up in price, and the tweezer top occur in the market, reversing to the downside. That means if we're going up in price and then the tweezer top occur at the top of an uptrend, it signifies that a bearish reversal is about to happen, and then you can see that the price will start pulling back down. So same thing with the tweezer bottom. The tweezer bottom formation is considered as a bullish reversal pattern seen at the bottom of a downtrend, and it consists of two candlesticks as well. So if we're going down in price, right, we're going down in price, and then this tweezer bottom occur at the bottom of a downtrend, it signifies that a bullish reversal is about to happen. And you notice in the chart also that it started pulling back up. So these are just other two examples of candlestick pattern. There are actually a lot of candlestick pattern, right? There are a lot of candlestick pattern. Just, you don't even need to like be keeping them the names of all of these candles. There are a lot, so I can't really teach you everything, and you don't even need all of them. You don't need to learn all of them because there are a lot of candlestick patterns, right? So you just need to get the main important ones and the one that you can use in the markets when trading them. So you don't need to really put all of the names in your head, right? But just understand the psychology and the formation of every candlestick that you see in the market. Just be able to understand the psychology behind their formation. That's it, so that you need to use it for a high risk to reward ratio when trading them. So let me just recap it again. I'll show you it on the chart and then we'll call it a day. So today we talked about some other two candlestick pattern, which we discussed about the tweezer top and the tweezer bottom. The tweezer top formation is considered as a bearish reversal pattern seen at the top of an uptrend. It consists of two candlesticks. The first candle being the bullish candle because we are going up in price before the reversal happened, and the second candle being the bearish candle. You mostly see that they are about equal size in price, right? The size of the candle are mostly equal. So most of the time you can also see it like this. Just depend on how it's able to represent the market. You can see it like this, right? You can see it like this. You can also see it somehow like this as well, right? You could see it like this as well. So it just depends on how you're able to see it in the market, right? It just depends on how you're going to see it and see it at maybe support or resistance level. So for the tweezer top, it's considered as a bearish reversal pattern seen at the top of an uptrend. It consists of two candlesticks, the first candle being the bullish candle, while the second candle being the bearish candle. So for the tweezer bottom, it's considered as a bullish reversal pattern seen at the bottom of a downtrend. It consists of two candlesticks, the first candle being the bearish candle, while the second candle being the bullish candle. And we get an example of how this candlestick play out in the market, right? We give an example of how this candlestick play out in the market. So let me just go there. So this is an example of a tweezer top, right? Because it occurs at the top of an uptrend, right? The first candle being the bearish candle, being the bullish candle, while the second candle being the bearish candle. So this is an example of a tweezer top. So this is the first candle, which is the bullish candle, and the second candle being the bearish candle. So you can see it occur at the top of an uptrend, signifies that a bearish reversal is about to happen. And the moment it occur, it was pulling up at first, and the moment the pattern occur, it started pulling down, right? You can see it started pulling down. So that's how powerful this candlestick patterns can be. So if you were trading candlestick patterns, as I said, if you were just trading candlestick pattern, you could just, after the formation of this tweezer top, you could enter for a sell at this point, right? Because you are going to short the market, well, you want to push the market down. So you could enter sell at this point, put your stop loss here, which is the amount of money you want to risk on this trade that you're taking. And then you can put your take profit at this point, meaning that if it hits here, you're going to make this amount of money. So an example of the so let's look at the example of the tweezer bottom. So tweezer bottom occur at the bottom of a downtrend, which signifies that a bullish reversal is about to happen in the market. So this is an example of a tweezer bottom. Mm. Network is having serious issue. Can you guys see my screen? Can you see my screen?
I can see your screen.
Okay. So let me show you the example of the um tweezer bottom. So this is an example of the tweezer bottom, right? This is an example of the tweezer bottom because we're going down with price, right? So at some point here, price was pulling down, and then the tweezer bottom occur, which the first candle being the bearish candle, while the second candle being the bullish candle. And whenever this candlestick form, it means that a reversal is about to happen in the market. So for this, I don't know why some people will be calling my line.
You call her, ask her, let her send it to you. You see, everything you just be. You are doing this type of work, you don't have to. All the mail I sent to them, even since yesterday, nobody responded. Customers are just disturbed. Who will need to stop? This complete. People have
So
need to rest.
whenever this pattern occur, just have it in mind that a reversal is about will be happening in the market. So as I say, if you were just trading maybe candlestick patterns, right? Or maybe if you have other confirmation you're using to trade it, you could just enter for a buy at this point after the candlestick formation, after the tweezer bottom, you could enter for a buy at this point, right? The moment it form, you could enter for a buy at this point, and then you can put your stop loss here, which is the amount of money you're winning 2 weeks on this trade, and then you can target probably here, and you can see it's played out well and hit your take profit. So you just made some quick bucks in the market. So we'll be stopping here for today. We're stopping here for today. Tomorrow, I think we should be done with candlestick patterns. So by tomorrow, we'll move ahead to chart patterns. So tomorrow we'll be talking about chart patterns. We talked about candlestick formation, candlestick patterns, which I gave you example of some candlestick patterns. And then today also we talked about some other candlestick patterns. So tomorrow we'll be talking about chart patterns, right? Chart patterns. So this is part 4 of this class. So the parts this is my YouTube channel. This is the part 1, right? Oh, it's crazy, man. So before you watch this one, make sure you watch this one and part 3 before you watch part 4. So with that being said, guys, I'll see you tomorrow in part 5 of the video. So tomorrow, part 5, we're talking about chart patterns. So goodbye. And don't forget, please, to like, share, and subscribe to this channel. And as well, comment, guys, comment.